everyone was starting to say, hey, this thing is here. And the big banks were like, F that. No, this needs to go away. This needs to be killed.
While big players like BlackRock and Millennium are making waves, Bitcoin itself seems stuck in a frustrating sideways pattern as summer winds down. What does this mean for the future of Bitcoin, XRP, and the wider crypto space? That's the central question.
Lamenting a little bit that summer's almost over. And you mentioned that here we are, the end of summer, and Bitcoin's kind of languishing. I actually prepped for that. So I am wearing the hopeful green candle pants, but I'm wearing the Bitcoin
the roller
coaster sock game. And
where's our volatility?
Because the thing about roller coasters, right, is everybody thinks of the ups and downs, the whoop-de-doos. But the real thing about a roller coaster is you end up in the same place.
The discussion opens with Mark Yusko's unique take on Bitcoin's current trajectory. He likens the market to a roller coaster, not the exciting, high-speed kind, but one where you go up and down only to end up in the same spot. Since February, Bitcoin has been riding this stagnant wave with little movement beyond predictable rises and falls. Yusko highlights that some see this as consolidation before the next major surge, while others worry about the 3 lower highs and lows that might hint at trouble. One of the main topics explored is the influx of institutional investors into crypto. However, Yusko warns that the involvement of these financial giants isn't all good news. Many of them are hedging their bets, using futures to offset their positions in Bitcoin ETFs. This kind of trading doesn't push Bitcoin's price higher. In fact, it often holds it back. Yusko recalls the 2017 moment when futures contracts were introduced, causing Bitcoin's price to plummet and not recover for years.
And I keep going back to the 2017 quote from Leo Melamed, right? So in 2017, last bull run, not the last bull run, but the bull run back then. And, everyone was starting to say, hey, this thing is here. And the big banks were like, F that. No, this needs to go away. This needs to be killed. And Melamed, who runs the CME, said, we'll tame Bitcoin. I'm like, that was an interesting choice of word, right? That, wolf of all streets, right? Wild animals, we got to tame them.
Despite Bitcoin ETFs drawing in billions, Yusko points out that this isn't necessarily the type of investment Bitcoin needs. The big players, Citadel, Millennium, and others, are more focused on short-term gains rather than a long-term commitment. The real future of Bitcoin, he argues, depends on regular investors and financial advisors getting involved. That shift, when it happens, could bring a significant $300 billion into the market. Yusko clarifies that it's not really Bitcoin going up. After all, one Bitcoin is always just one Bitcoin. It doesn't change. What changes is the value of money we use to measure it, dollars, euros, or yen. The more fiat currency devalues because it gets printed more and more, the better Bitcoin stands the test of time. In other words, it's not Bitcoin improving, it's fiat money getting worse. It is a lot like the way everything, from gas to groceries, cost more today than they did years ago. Not because those products are worth that much more, it's simply because money in itself is worth less. To drive that point home, Yusko volunteered some historical comparisons. He noted that when he was young, gas cost 33 cents a gallon and a Coke was 25 cents a can. Now both cost more, but not because they've improved as products. It's just the value of the dollar has declined. It's the same with real estate.
According to Zillow, my house here in Chapel Hill, North Carolina, is up over 50% in the last 2 years. No, it's not. My house did not grow. My house did not get more efficient. It didn't add any more rooms. It actually wore out. I had to put money in the gutters and I had to fix a crack here. And I think some flying squirrels burrowed into my soffit. And here's a fun fact for all you guys.
Those things are disgusting. They destroyed my last house.
They're totally Scott. They pee in the same place. It's like they have a latrine. They don't pee all over the place. They don't go out.
Red.
It's crazy. So I had like an army of people with traps trying to get rid of
I
that.
had a white house, and apparently they're attracted to white houses and our software.
I have the white sock. Exactly. Yep.
Yeah, it's great. Yeah, that's brilliant, and that was all during COVID. I remember that well. So listen, that we talk about the seasons of crypto, then, right, or of Bitcoin, and we had the thaw. Do you still think then that we have this massive move, Fourier
We're in
cycle,
crypto fall.
big fall?
We're in the first third of crypto fall.
Ultimately, Yusko believes we are entering what he calls the crypto fall, and he predicts a sizable move in the price of Bitcoin before the end of the year. He also believes Thanksgiving 2024 will be that turning point. A little while back, during family gatherings, crypto fans were sidelined, but he said that would be the last time, because soon after that, they'll be celebrated as prices for Bitcoin begin to rise. Yusko still believes Bitcoin has a great long-term future, thinking it can rise within the next few months to six figures, and maybe even go to $150,000. He believes that it is going to be flooded with demand from institutional investors and makes a comparison with the gold market where gold ETF was launched. He believes that, like gold, Bitcoin's price is likely to get some temporary manipulation, but it will liberate itself in the long run.
If you look at gold, when the gold ETF came out, it took 9 months before gold got back to the price it was before the ETF was launched. And everyone's like, whoa, what happened? Think about it. The reason the gold ETF was created was because JP Morgan was actually short 2 times the world's gold. Just let that sink in. And you're like, how do you know that? I'm like, because a friend of mine who runs a giant hedge fund actually went through the 400 pages, not 400 boxes, 400 boxes of documents that were posted on the internet after the global financial crisis when they got bailed out. So long story short, they were short all this gold. And so they delayed the release of GLD for 3 years, 3 years. And then finally said, okay, now we're short. So now you can have the patsy longs come in and take the other side of our shorts. And so they spoofed that price for 9 months before.
Let the floodgates open.
No, because what happens is, remember, the futures price is higher than the spot price because we're optimistic humans. And when that spread is really high, there's a huge windfall to short the future and buy the spot.
Free money.
But as more people do it, the spread closes. And when the spread hits the cost of financing, game over. I mean, not game over like bad stuff happens. It's not.
No, then they all just get long. Then they all just take the spot long positions and ride it to Valhalla.
Exactly.
However, with regard to Ripple, he continues to harbor skepticism towards the company and the XRP ledger. In one interview, Yusko spoke about his frustration with the integrity of the ledger, calling it corruptible and saying how it is not showing real adoption. During a conversation with Darren Moore Jr., Yusko admitted that he struggles with the overall concept of the XRP ledger. While he acknowledges its potential as a payment system for banks and brokerage firms, he sees little concrete evidence that it's gaining meaningful traction.
At least so far as I can tell, there's very little evidence. There's lots of announcements with very little behind it. And I think the idea is elegant. I think Brad's a very smart guy. I think I hate the way they issued it, and so does the SEC, because they deemed it a security issuance, which it was. And they also Judge Torres made the right ruling that all of the things like between you and I aren't securities. That's clearly the right answer, even though the SEC is appealing that and says, you're wrong, Judge Torres, but she's right.
The XRP ledger, launched in June 2012, was intended to offer a faster, cheaper, and more energy-efficient alternative to Bitcoin for transactions. XRP gained widespread attention in late 2017, reaching an all-time high of $3.30, a level it has yet to revisit. In July, XRP received a boost when Judge Analisa Torres delivered a summary judgment in Ripple's case against the Securities and Exchange Commission, SEC. While the judge agreed that Ripple's initial sale of XRP to institutional clients constituted a securities offering, she ruled that other XRP transactions did not fall under this classification. Yusko agreed with the judge's ruling, criticizing Ripple's initial issuance of XRP and the concentration of the currency among a few key holders.
I don't like the concentration. I don't like how the foundation and Brad and a few other people own so much of it. Now they fixed that. It's down from 70 to 50, or maybe it's even sub 50 now, but it's still too high. So in my mind, it's still corruptible. And I don't see any real major adoption that anyone's pointing to, the same way, people can point to Ethereum or even Solana has had some big design wins. So, but I'm open to the idea that there could be more good tech added.
According to CoinCarp data, the top 100 XRP addresses hold 33% of the total supply, with only 52% of the supply circulating in the market. Yusko pointed out the lack of significant adoption for XRP, especially when compared to other cryptocurrencies like Ethereum or Solana, which have seen notable development successes. When asked to rank cryptocurrencies, Yusko placed XRP among a group of coins in the number 3 stack, alongside Dash and Monero, XRM.
To me, it's Bitcoin's the king, Ethereum's the crown prince, and there's all the other princes that hate each other. It's like Saudi politics. But if I had to rank the others, XRP, Dash, Monero, a handful of others would be higher up in that number 3 stack. Then you got the dog shit coins and all that stuff that I just think is a waste of time. I don't get it, but I haven't got it since day one, like Pepe and all this stuff. Look, that is Ponzi. That is just Ponzi. And Ponzi can go on for a long time.
However, Yusko also noted that Bitcoin's relatively limited distribution makes it difficult to adopt widely as a medium of exchange. He emphasized the need for broader distribution of digital assets to enhance their usability. Anything that allows us to get broad distribution of digital assets would be better, he concluded. However, that could all change soon. Bitcoin is approaching a significant milestone that could have a major impact on the crypto market. We're talking about potentially hundreds of billions of dollars flowing into the space in the short term. Notably, BlackRock, one of the largest financial institutions, is working closely with others to bring about changes that the crypto world has never experienced before. When BlackRock submitted their application on June 15th of last year, it became clear that something big was on the horizon. Although predictions about an approval date were slightly off, it was evident that approval was inevitable. The significance of BlackRock's involvement cannot be understated. Many traditional financial players aren't exactly thrilled about the shift toward a new blockchain-based financial system, mainly because they benefit from the current setup. But once BlackRock signaled its interest, it was a game changer. As we entered January, the sheer volume of assets at play was staggering. Around $30 trillion, largely controlled by financial advisors managing funds for older generations. When these advisors were told to allocate even a small portion to crypto, say 1%, that could mean $300 billion entering the market. For perspective, this would be more money than has been invested in Bitcoin in its entire 15-year history. Institutional investors, who manage billions in capital, are looking for platforms with the liquidity and stability necessary for their massive inflows. Once key players like BlackRock and Coinbase got involved, it opened the door for other big names to follow suit. Interestingly, JP Morgan, whose CEO had once famously dismissed Bitcoin as a Ponzi scheme, is now playing a crucial role. Despite initial skepticism, JP Morgan is now backing the infrastructure for cryptocurrency transactions, which indicates that even traditional banks are preparing for a future where Bitcoin has a central role. So why the sudden shift in attitude? It seems likely that these large institutions, including JP Morgan, want to get in on Bitcoin early, before the majority of their customers do. This way, by the time the public starts investing heavily, these institutions will already have substantial positions. The CEO of JP Morgan might change his tune on Bitcoin in the future, but by then it will be too late for many retail investors to catch up. Just as we saw in the last cycle, institutions often make their moves before the general public, potentially driving up prices before the masses can get in. This is something Whitney Webb has also brought up previously.
Bitcoin's supposed to be ideal money, right? And a tool of financial freedom. And if we let the people that have run this insane monetary casino for decades use Bitcoin for their ends, Bitcoin will cease to be that, period.
This isn't just about Bitcoin, it extends to other cryptocurrencies as well. Just like Bitcoin ETFs paved the way, we're now seeing Ethereum ETFs emerge. Soon we can expect ETFs for other major cryptos like Solana and XRP. As regulations tighten and the landscape becomes clearer, the stance of major banks and financial institutions will evolve. Eventually, we may even see these institutions fully supporting assets like XRP and HBR once they're officially approved and ready for public adoption. The reason we haven't heard much about these cryptocurrencies yet is that they're still in the pipeline. But rest assured, big players like BlackRock are already involved behind the scenes. So the question is, will you position yourself ahead of the curve, or will you wait like the majority of the public, many of whom are still unfamiliar with Bitcoin and cryptocurrency in general? Those who move early might benefit from this growing momentum, while others may find themselves joining late. Recent data on Bitcoin ETF inflows highlights this trend. Currently, about $50 billion has flowed into Bitcoin ETFs, while around $10 billion has exited from other funds like GBTC, resulting in a net increase of $50 billion. While this number is slightly behind initial projections, around 1/16 of what was expected in the first year, the growth is still substantial. More funds are coming in daily, and the market continues to make higher lows and highs, signaling growing accumulation. Experts believe that the next 12 months could be pivotal. Bitcoin's recent supply shock, coupled with the upcoming halving, could double its fair value. Ordinals, runes, and rising transaction fees are adding a new dynamic to the market, suggesting that significant growth is still on the horizon. I mean, we might as well consider a more conservative scenario for Bitcoin's growth. Instead of doubling after the upcoming halving, imagine it reaches a fair value of $80,000. What's interesting is that different models, such as Tim Peterson's Metcalfe's Law model and Charles Edwards' model, which is based on power consumption and hash rate, both estimate Bitcoin's fair value around $80,000. This convergence of independent theories strengthens the argument that $80,000 could be a realistic target. Currently, with Bitcoin priced at $62,000, it's still below this estimated fair value. As it moves toward that value, a fear of missing out, FOMO effect, may begin to take hold, especially as people notice the market's upward trend. This could lead to significant excitement, with more investors jumping in as Bitcoin inches closer to six figures. This upcoming holiday season, particularly Thanksgiving, could mark a turning point. Unlike recent years where those invested in crypto might have faced skepticism, this time the narrative could change. With Bitcoin potentially approaching or surpassing $100,000, discussions around the dinner table could be much more enthusiastic, with many institutions and financial advisors fully on board. Even major players like Vanguard could be embracing crypto by then. If this momentum continues, we might see a final parabolic move through early next year, leading to even higher price levels by April. What do you think the future holds? Let us know in the comments below.